Based on the historical data and forecast, Bitcoin exhibits an overall upward trend. The price has consistently tested and bounced off the support level of $102,700, while the resistance level has fluctuated around $104,800. The RSI indicates that the asset is generally within a neutral range, occasionally approaching overbought territory but rarely entering oversold conditions. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential for a pullback or consolidation. Therefore, I propose a strategy that combines elements of trend following and mean reversion. Given the current forecast prices, I recommend a long position with an entry price of $103,800. The stop loss should be set just below the support level at $102,500 to protect against a potential downside breakout. The initial target price should be set at $106,600, aligning with the forecast prices for May 19, 2025. If the price reaches this target, consider trailing the stop loss upwards to secure profits and potentially capture further gains. This strategy aims to capitalize on the prevailing upward trend while mitigating risk through careful placement of stop loss orders. Based on the historical data and forecast, Ethereum exhibits a strong upward trend. The price has consistently broken through resistance levels, and the forecast predicts continued growth. Considering the RSI readings, the asset has recently been in overbought territory, fluctuating between 77.8 and 85.7, suggesting a potential pullback before further gains. However, the overall momentum remains positive. The Bollinger Bands indicate that the price has been trading near the upper band for a significant portion of the period, reinforcing the bullish trend. Therefore, I recommend a long position strategy with a focus on capitalizing on the upward momentum while managing the risk of potential short-term corrections. The entry price for this strategy will be $2,470. The stop loss will be set at $2,410, just below the lower Bollinger Band, to mitigate potential losses during a pullback. The initial target price will be $2,600, aligning with the nearest support level. If the price reaches this target, we will move the stop loss to $2,500 to protect profits and consider a second target price of $2,740, the previous resistance level. This strategy combines trend analysis, RSI signals, and Bollinger Bands to maximize potential returns while minimizing risk. This portfolio is the most efficient of the three strategies. Based on the historical data and forecast, XRP demonstrates an upward trend with increased momentum. The price has consistently tested and rebounded from the support level of $2.45, while approaching the resistance level of $2.76. The RSI values fluctuate between 45.9 and 69.1, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price is currently trending above the moving average, suggesting bullish sentiment. Therefore, I recommend a long position strategy. We will enter a long position when the RSI falls below 40, indicating an oversold condition. The entry price will be $2.46. We will set a stop loss order at $2.36, just below the recent low, to limit potential losses. The initial target price will be $2.7, aligning with the forecast price for May 20, 2025. To maximize returns, we will implement a dynamic trailing stop-loss strategy. Once the price reaches $2.7, we will move the stop-loss to the recent swing low, which is $2.54. This allows us to secure profits while protecting against a potential reversal. If the price continues to rise, we will further adjust the stop-loss to maintain a favorable risk-reward ratio. The final target price will be $2.76, the resistance level. This strategy combines RSI-based entry signals, Bollinger Bands confirmation, and a dynamic trailing stop-loss to capitalize on the upward trend of XRP while effectively managing risk. This portfolio is expected to achieve high returns. Based on the historical data and forecast, BNB shows an overall upward trend. The price has consistently tested the support level of $636 and bounced back, indicating strong buying pressure at this level. The RSI has recently crossed into overbought territory, fluctuating between 65 and 69, suggesting a potential pullback is imminent. Considering the forecast prices, which predict a continued increase, I recommend a strategy that leverages this upward momentum while incorporating risk management. I propose a buy position when the price retraces to $654, coinciding with the first forecast price. Set a stop loss at $636, right at the support level, to protect against a significant downturn. The initial target price should be $673, aligning with the second forecast price. To refine the strategy, I will incorporate the Bollinger Bands. The price has been consistently trading within the bands, and a break above the upper band could signal further upside potential. If the price reaches $673, a secondary target of $682 can be set, based on the last forecast price. However, if the RSI remains consistently above 70, indicating overbought conditions, consider taking partial profits at $673 and waiting for a pullback before initiating further buy positions. This combined RSI and Bollinger Bands approach aims to maximize returns while mitigating risk, capitalizing on the predicted upward trend of BNB. Based on the historical data and forecast, Solana exhibits a strong uptrend, consistently breaking through resistance levels. The RSI consistently above 50 indicates a bullish momentum, with values nearing overbought territory in recent days. The Bollinger Bands show the price moving towards the upper band, further confirming the upward trend. I recommend a long position strategy. The entry price should be $174, coinciding with the beginning of the forecast period and a recent price consolidation. A stop loss should be placed at $164, aligning with the established support level to limit potential losses. The initial target price is $189, based on the forecast price for May 20, 2025. To refine this strategy, I'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, consider a secondary entry at $174, maintaining the $164 stop loss and adjusting the target price to $186. If the price touches the lower Bollinger Band, it signals a potential buying opportunity, also entering at $174 with a $164 stop loss and a target of $189. This combined approach leverages both momentum and volatility indicators for optimized returns, capitalizing on both overbought and oversold conditions within the established uptrend. Based on the historical data and forecast, Dogecoin shows a strong upward trend, particularly evident in the recent surge from $0.17 to $0.251. The RSI consistently climbed above 50, reaching over 80 on several days, indicating overbought conditions, but the price continued to rise. The forecast for the next week projects continued upward momentum, with prices ranging from $0.223 to $0.252. Considering the support price of $0.198 and the Bollinger Bands, the strategy will focus on capitalizing on pullbacks to the lower Bollinger Band while respecting the support level. The primary strategy is a momentum-based approach with RSI signals. We will enter a long position at $0.223, coinciding with the first forecast price and a potential pullback to the lower Bollinger Band. The stop loss will be set just below the support level at $0.195 to protect against significant downside risk. The initial target price will be $0.251, the previous resistance level. If the price breaks through this resistance, we will adjust the target price to $0.252, aligning with the final forecast price. This portfolio aims for high returns by leveraging the ongoing upward trend and utilizing RSI and Bollinger Bands to identify optimal entry and exit points. Based on the historical data and forecast, Cardano shows a clear upward trend, breaking through the resistance level of $0.841. The RSI consistently rises, indicating increasing buying momentum. The forecast data further supports this bullish sentiment, predicting prices above $0.8 for the next week. Therefore, I recommend a long position strategy. Entry price will be $0.794. The stop loss should be set slightly below the support level at $0.769, which is $0.76. The initial target price will be the previous resistance level of $0.841. To refine the strategy, I incorporate the Bollinger Bands. The price is currently near the upper band, suggesting a potential pullback. However, given the overall bullish trend, I will maintain the long position. If the price retraces to the middle band around $0.835, it presents a good opportunity to add to the position. The second target price will be set at $0.857. This portfolio combines the trend analysis, RSI signals, and Bollinger Bands to maximize potential returns while managing risk. The strategy is to buy at $0.794, set a stop loss at $0.76, and target $0.841 and $0.857. Based on the historical data and forecast, TRON exhibits an upward trend, consistently bouncing off the support price of $0.257. The RSI indicates that the asset is approaching overbought conditions, fluctuating between 68.3 and 70.9. The Bollinger Bands are widening, suggesting increasing volatility, and the forecast price projects a continued rise, reaching $0.283. Considering these factors, I recommend a long position with an entry price of $0.269. A stop loss should be placed just below the support level at $0.257, specifically $0.256, to protect against potential downside risks. The target price for this trade is set at $0.283, aligning with the forecast price and providing a reasonable profit margin. I suggest utilizing a combination of RSI and Bollinger Band strategies. If the RSI drops below 30, indicating an oversold condition, consider averaging down to capitalize on a potential rebound. Conversely, if the price touches the upper Bollinger Band, consider taking partial profits to secure gains. This portfolio should generate high returns. Based on the historical data and forecast, SUI shows a generally upward trend, particularly noticeable in the recent days. The price has been testing the resistance level of $4.12, and the forecast indicates a continuation of this upward momentum with prices reaching $4.22. The RSI consistently fluctuates above 60, indicating strengthening buying pressure. Considering these factors, I propose a long position strategy. We will enter a long position at $3.98. The stop loss will be placed slightly below the support level at $3.90 to mitigate potential losses if the price reverses. Our initial target price will be $4.15, aligning with the forecast and recent resistance levels. To refine the strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, it signals a potential oversold condition, and we'll consider entering a long position at the lower band price. Conversely, if the price reaches the upper band, it suggests an overbought condition, and we might consider taking profits or tightening our stop loss. For this specific scenario, with the forecast predicting prices above $4.15, we will adjust our target price to $4.22, aiming to capitalize on the anticipated upward movement. This combined strategy balances the momentum of the trend with the volatility indicated by the Bollinger Bands, optimizing for high returns while managing risk. Based on the historical data and forecast, Chainlink exhibits a clear upward trend. The price has consistently bounced off the support level of $15.9, and the forecast indicates continued price appreciation towards $18. The RSI readings fluctuate between 46.6 and 72.4, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility and potential for price swings. Considering these factors, I recommend a long position strategy. We will enter a long position when the RSI dips below 50, specifically when it reaches $46.6 on May 8, 2025. The stop loss will be set slightly below the support level at $15.5, and the initial target price will be the resistance level of $18.3. To refine the strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, it suggests a potential buying opportunity. We will adjust the target price based on the forecast. If the price reaches $17.7 on May 19, 2025, we will take partial profits and move the stop loss to break even. If the price continues to rise and reaches $18 on May 20, 2025, we will exit the remaining position. This blended strategy, combining RSI and Bollinger Bands, aims to capitalize on the upward trend while mitigating risk through strategic stop-loss placement and partial profit-taking. The final portfolio will consist of a long position with an entry price of $15.6, a stop-loss of $15.5, and a target price of $18.3. Based on the historical data and forecast, Arweave demonstrates an overall upward trend, consistently challenging and breaching the resistance level of $8.68. The RSI consistently fluctuates, but generally remains above 50, indicating a bullish momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for further price movement. Considering these factors, I propose a long position strategy. Initially, enter a long position at $8.08, coinciding with the first forecast price. Set a stop-loss order at $7.9, slightly below the support level of $8.06 to mitigate potential losses. The initial target price should be $8.63, aligning with the previous resistance level. To maximize potential returns, I recommend a dynamic target price adjustment. If the price reaches $8.63, move the stop-loss to the entry price of $8.08, securing profits and limiting downside risk. Subsequently, set a new target price at $8.67, based on the forecast price for May 15, 2025. As the price approaches $8.67, consider taking partial profits and adjusting the stop-loss accordingly. This adaptive strategy combines RSI and Bollinger Band signals with support and resistance levels to optimize risk-reward ratios and capitalize on the anticipated upward trend of Arweave. Based on the historical data and forecast, the graph demonstrates a clear upward trend. The price has consistently moved higher, breaking through resistance levels and showing strong momentum. The RSI, while fluctuating, has generally been trending upwards, with values frequently above 50, indicating bullish sentiment. The Bollinger Bands show the price consistently moving towards the upper band, further reinforcing the upward trend. Therefore, my investment strategy will be a long position, capitalizing on the anticipated price increase. I recommend entering a long position at $0.114, coinciding with the first forecast price. To mitigate risk, set a stop-loss at $0.119, just above the support level. For target price, I suggest $0.127, aligning with the final forecast price and a reasonable profit margin given the current trend. However, if the price continues to surge, consider adjusting the target price upwards. This strategy combines technical indicators and forecast data to maximize potential returns while minimizing risk. The RSI suggests the asset is not yet overbought, allowing for further appreciation. The Bollinger Bands confirm the upward momentum, making this a favorable time to enter a long position. This approach aims for a high return by riding the current bullish trend, with defined risk management parameters. Based on the historical data and forecast, Starknet shows a volatile trend with recent upward momentum. The price has bounced from the support level of $0.173, and the RSI has moved above 50, indicating a strengthening bullish sentiment. The forecast for the next week projects a continued upward trajectory, with prices ranging from $0.168 to $0.186. Considering the Bollinger Bands, the price is currently approaching the upper band, suggesting a potential pullback or consolidation. Therefore, I recommend a strategy focused on capitalizing on short-term upward movements while managing risk. I propose a strategy combining RSI and Bollinger Bands for optimal returns. We will initiate a long position when the RSI dips below 30, indicating an oversold condition, and the price touches the lower Bollinger Band. The entry price will be $0.168. The stop-loss will be set just below the lower Bollinger Band at $0.16 to protect against unexpected downturns. The target price will be set at the resistance level of $0.221, aiming for a significant profit. If the RSI reaches 80 and the price hits the upper Bollinger Band, consider taking partial profits at $0.195 to secure gains and reduce exposure. This strategy balances potential upside with risk mitigation, aiming for high returns within a defined risk tolerance. Based on the historical data and forecast, Optimism shows a volatile trend with periods of both decline and significant rallies. The price action has recently tested the resistance level of $0.91 and pulled back. The RSI indicates that the asset is currently neither excessively oversold nor overbought, fluctuating around the mid-range. However, the forecast suggests a continued upward trajectory, with prices expected to rise to $0.851. Considering the Bollinger Bands, the price is currently within the band, suggesting a potential for further movement within this range. We will implement a combined strategy utilizing RSI and Bollinger Bands for optimal returns. Our strategy involves a long position with an entry price of $0.771. The stop loss will be set just below the support level at $0.715, specifically $0.70, to mitigate potential losses. The initial target price will be $0.85, aligning with the forecast and the upper Bollinger Band. If the price reaches this target, we will move the stop loss to break even to protect profits. If the price continues to rise, we will set a second target price of $0.90. This combined approach leverages the upward momentum indicated by the forecast and the dynamic support of the Bollinger Bands, while the RSI helps to confirm the entry point and avoid overbought conditions. Based on the historical data and forecast, KAITO has shown a significant upward trend, particularly after May 8, 2025, with prices surging from $1.45 to $1.94. The RSI consistently above 60 indicates strong momentum. Considering the forecast for the next week, with prices predicted to reach $1.99, a long position is warranted. We will implement a strategy that combines RSI and Bollinger Band signals. The entry price will be $1.65, coinciding with the first forecast price and a potential pullback after the recent surge. The stop loss will be set at $1.55, just below the lower Bollinger Band on May 14, 2025, to protect against a potential downside reversal. The initial target price will be $1.9, aligning with the forecast for May 16, 2025. To maximize potential returns, we will implement a trailing stop-loss strategy. Once the price reaches $1.9, the stop-loss will be adjusted to $1.7, securing profits while allowing for further upside. If the price continues to rise, reaching $1.99 as forecasted, the final target price will be $2.1, capitalizing on the continued bullish momentum. This strategy leverages the strong upward trend, utilizes technical indicators for precise entry and exit points, and incorporates risk management through stop-loss levels, ultimately aiming for high returns. Based on the historical data and forecast, PNUT the Squirrel shows a strong upward trend, particularly evident from May 8, 2025, onwards. The price has consistently broken through resistance levels and the RSI has been consistently above 50, with several days reaching overbought conditions. The forecast for the next week predicts continued upward momentum, with prices expected to reach $0.423. Given this bullish outlook, I recommend a long position strategy. We will use a combination of RSI and Bollinger Bands to maximize profit potential. My strategy involves entering a long position at $0.331. The stop loss will be set at $0.32, just below the lower Bollinger Band, to protect against unexpected downturns. The initial target price will be $0.406, aligning with the forecast price for May 17, 2025. If the price breaks through this target, we will adjust the target to $0.423, based on the forecast for May 19, 2025. This strategy aims to capitalize on the ongoing upward trend while mitigating risk through strategic stop-loss placement and dynamic target adjustments based on forecast data. This approach balances potential gains with risk management, crucial for high-return investments. Based on the historical data and forecast, Raydium exhibits a generally upward trend, particularly evident in the recent price surge to $3.37. The RSI consistently fluctuates around the 60 to 70 range, indicating strengthening momentum without reaching overbought levels. The Bollinger Bands have been widening, suggesting increasing volatility and potential for further price movement. Considering these factors, I propose a strategy combining RSI and Bollinger Bands for optimal returns. We will initiate a long position when the RSI dips below 50 and the price touches the lower band, aiming to capitalize on potential rebounds. Specifically, on May 13, 2025, the RSI was 64.9 and the price was $3.37. We will enter a long position at $3.37, placing a stop-loss order at $3.2 to mitigate potential losses if the downward trend persists. The initial target price will be $3.47, aligning with the forecast for May 20, 2025. If the price reaches $3.47, we will consider moving the stop-loss to the break-even point to secure profits and potentially extend the target price to $3.5 based on the upward trend. This combined strategy leverages both momentum and volatility indicators for a high-return investment approach. Based on the historical data and forecast, Pendle exhibits a generally upward trend, although with noticeable volatility. The RSI consistently fluctuates above 50, indicating bullish momentum, but occasionally dips close to the oversold level of 20. The Bollinger Bands show periods of contraction and expansion, suggesting potential breakout opportunities. Considering the forecast for the next week, with prices predicted to climb to $4.24, I recommend a long position strategy. Specifically, enter a long position at $3.94. Set a stop-loss order at $3.52, just below the support level, to mitigate potential losses if the price reverses. Aim for a target price of $4.44, which is a reasonable profit margin based on the forecast and recent price action. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI falls below 20, consider entering a long position, anticipating a bounce back. Conversely, if the price touches the lower Bollinger Band, it could signal an oversold condition, also prompting a long entry. For the current strategy, we will focus on the initial long position at $3.94. If the price breaks above the upper Bollinger Band, consider raising the target price to $4.64. This combined approach, blending trend analysis, RSI, and Bollinger Bands, should provide a robust and high-return investment strategy for Pendle. Based on the historical data and forecast, Ethena has shown considerable volatility, with a recent upward trend. The RSI indicates that the asset is currently approaching overbought territory, with values fluctuating around 68.5. Considering the Bollinger Bands, the price has been consistently touching the upper band, suggesting a potential for a pullback. The forecast indicates a continued upward trajectory, albeit with minor fluctuations. Therefore, I propose a strategy that combines trend following with tactical profit-taking. I recommend a long position with an entry price of $0.405. The stop-loss should be placed just below the lower Bollinger Band at $0.384 to protect against a sudden downturn. The initial target price should be set at the resistance level of $0.486, aiming for a significant profit. If the price reaches this target, consider taking partial profits and moving the stop-loss to break even. For a more aggressive approach, a second target price can be set at the support price of $0.846, but this carries higher risk. The strategy should be reviewed daily, adjusting the stop-loss and target prices based on the latest data and market conditions. Based on the historical data and forecast, Eigenlayer shows a volatile trend with periods of consolidation and strong upward movements. The RSI indicates periods of oversold and overbought conditions, while the Bollinger Bands suggest potential breakout opportunities. Considering the support price of $0.775 and the resistance of $1.6, a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels is recommended. Initially, we will implement a long position when the RSI falls below 40, indicating an oversold condition. The entry price will be $0.775, coinciding with the support level. A stop-loss will be placed at $0.751, slightly below the bottom of the Bollinger Bands to mitigate potential downside risk. The target price will be $1.24, aligning with the initial forecast price and a significant resistance level. Subsequently, we will adjust our strategy based on the forecast data and Bollinger Bands. If the price breaks above the upper Bollinger Band, indicating a strong upward momentum, we will consider taking partial profits and adjusting the stop-loss to protect gains. For example, if the price reaches $1.4, we will take partial profits and set a new stop loss at $1.3. If the RSI reaches 80, indicating an overbought condition, we will consider reducing our position size or exiting the trade. This dynamic approach, combining technical indicators and price levels, aims to maximize returns while managing risk in the volatile Eigenlayer market. The final target price will be $1.5 based on the forecast.